There's been tons of SoFi news this week that sent the stock on an absolute roller coaster. The biggest piece of news among them this week was a bunch of insider executives started selling the stock, including the chief risk officer of SoFi. The stock is down over 17% over the past 5 days as of this recording. And the question we're left with is, why did these executives start selling the stock all of a sudden, and what does this mean for us? So, of course, I'm recording this and the trading week is not over yet. So, we're going to see where the stock closes out on Friday. And before I talk about the insider selling, I want to run through some other pieces of news for the company. If I sound sick, it's because I am sick, but at least you get that late night radio talk show host voice. Starting off the week on Monday, we got news through Bender9000 on Reddit that SoFi was beta testing new features for the members, including a Zelle integration, allowing SoFi members to be able to send Zelle payments within the SoFi app. This is a top request by users, but the launch ETA is not yet known as to when this will be live. They're also building out access for alternative assets, which has been in testing for many years now. They're expected to launch this in early 2024. And finally, they're adding support for money market mutual funds, which are in demand following the Fed rate hikes, as these funds offer higher yield than the banking and have more favorable tax treatments. This is expected to launch also in early 2024. In addition to this, on Wednesday, SoFi released a new ETF for investing in short-term government bonds, which generally have a 3-year maturity. So from a product perspective, it seems that the company is maintaining a continuously aggressive pace of releases. And one of the more interesting pieces of news this week that I talked about was that SoFi announced a shareholder Q&A to be hosted on December 4th, broadcasted live through Twitter Spaces. And the interesting piece here is that they're allowing retail investor shareholder questions through Say Technologies. Now, I just took a couple of screenshots of the highest voted shareholder questions so far, and there's a couple of discrepancies when you filter by top voted versus shares represented. Let's start off with shares represented. We have the top questions here by Chris Hager, who we've talked to many times, who's talked to management multiple times, and these by and large are legitimate questions around the acquisition of Technisys, around the technology platform in general. And the third highest voted shareholder questions by shares represented is with regards to insider selling. So obviously this is top of people's minds. It's very recent news. And, even this I think is okay, although, I don't think management is going to talk about this or say anything about it with regards to insider selling. People sell for many different reasons, right? Especially when those shares are granted to these executives periodically as a form of compensation and reward. This is their paycheck, essentially. Now, the reason why I said there's discrepancies is because when you filter this out by top voted, you get vastly different quality questions. And I should mention here that if you vote for a question, you get one vote. Everybody gets one vote, regardless of how many shares they hold. So this is essentially the most amount of votes on aggregate. But the discrepancy here is, if I have 500,000 shares, that's very different than somebody who has 10 shares, for example, right? In terms of the conviction, in terms of maybe the knowledge around the company in general. So the way I'm looking at it is really from a buy shares represented perspective, because if you have 500 people voting who all on average own 2,000 shares, to me personally, that's less valuable than say 50 people in the retail community who own hundreds of thousands of shares, right? And this might be a personal bias, but the reason I bring up this discrepancy is because it affects the quality of these questions. This is drastically different quality. For example, the highest voted question when we filter by the number of votes is, when will the company be profitable? And I made a post about this on X expressing some frustration. The reason why is because management has guided for profitability in every single quarter so far this year. They've reiterated that guidance in every single interview, every single fireside chat, every single investor conference. The entire market right now is expecting for Q4 profitability for SoFi. So basically, management is going to give the exact same answer, just regurgitated, that they've given time and again every single public appearance this year. And all of a sudden, you as a retail investor have just burned a valuable question in a Q&A period that doesn't happen very often. It's a very rare occurrence for retail investors to be asking questions. And similarly, the second question around dividends, SoFi is still in high growth mode, which means that they have a better return on investment, reinvesting that capital into the business or through acquisitions, rather than paying that out in a dividend to entice shareholders to hold the stock. Perhaps in the future, dividends are going to be the plan, but it's so far into the future that I don't think management would provide any valuable, actionable insight in terms of a response. And in that post that I made on X, somebody commented saying that, everybody is entitled to their questions and that I was somehow being disrespectful. But the way I see it, this is a very unique opportunity that management has provided to us retail investors. And many of these questions are very basic stuff that we've been covering on the SoFi Weekly podcast for the past year. And even if you don't watch the SoFi Weekly podcast, management has talked about these things before. If you have any semblance of due diligence on the company, or if you trust management's guidance that they've given time and again, you know the answer to the profitability question, right? And so if the highest voted question is something that management has continuously reiterated every single time, like 5 or 10 times this year at least, on different interviews, fireside chats, and multiple times on earnings calls even, it just comes off as tone deaf from the retail community, in my personal opinion. And overall, this does not inspire confidence for management to keep providing opportunities like this for us to have an open dialogue with them if we're going to ask these questions that they've consistently answered in the past. Either way, the session is on December 4th. I'll stop rambling about that. Those are just my thoughts. I'll be covering it on my channel live. SoFi also has a fireside chat with CFO Chris Lapointe coming up on November 15th at the Stephens Annual Investment Conference. Now, the other major piece of news that I wanted to chat about before we jump into the insider selling was SoFi's 10Q, which was released on Wednesday, which has also sparked some back and forth in terms of SoFi's loan sales. And I think the best summary of this was Chris Hager's post yesterday, because Chris was able to have an open dialogue with SoFi's Chief Financial Officer, Chris Lapointe, and he shared the results of this discussion. So I'll read this post in full, as I believe it's really important to clear the air on this bear case, or on this FUD essentially, which undoubtedly contributed to some of the stock price action falling this week. The post from Chris Hager reads, "There's been a lot of chatter since the 10Q came out yesterday that SoFi is somehow being dishonest by reporting the gain from sale at 105.1%. SoFi sold $15 million in loans in third quarter 2023. What has everybody up in arms is the fact that the cash they received up front was exactly $15 million, and the entire 5.1% gain was from servicing assets recognized. People are concerned that SoFi is trying to pull the wool over investors' eyes and pull off some tricky accounting so that they can claim they have 105.1% gain on sale margin. Really, their loans are only worth 100% of unpaid principal. This is not what's happening here. SoFi services these loans. That means that the borrowers actually keep paying SoFi the money. SoFi then takes a fixed payment and then pays the rest to the company who bought the loans. The contractually obligated fixed payments are what's included in the servicing assets recognized above. In this case, the partner who bought the loans did not want to pay out as much up front, but is willing to give out a larger portion of each payment going forward to SoFi to service the loan. The entirety of the gain is recognized as the present value of all those future guaranteed payments based on a discounted cash flow model." Basically, Chris says, this is a lot of accounting jargon, so he uses a real world example. So let's say you lend $200 to your friend Joe. He agrees to pay you $20 a month for a year, adding up to $240 total. You immediately go to your other friend Jill and you tell her that if she pays you $200 now, you'll pay her $19 a month for the next year. So you're essentially paying out $228. So now you have the original $200 back because, Jill paid you $200. And every month when Joe pays you $20, you pocket $1 and you give the remaining $19 to Jill. That dollar that you're pocketing every month is a servicing right. It's guaranteed you're going to get that money as long as Joe keeps paying off his $20 loan every month. And you already have your original $200 back in your pocket, right? Because Jill paid you $200. And so essentially you're making $1 profit every single month, so long as Joe keeps paying you that money. This is exactly what SoFi did in a nutshell, Chris argues. And continues with the post, "Just because I know people are going to try to nitpick, yes, it's true that if Joe stops paying you, then you don't get the extra dollar. However, built into that servicing asset calculation is the fact that some of the loans will go delinquent and will stop being paid. The loss of these funds is because delinquency is included in the 5.1% gain on sale margin." With regards to fair values, Chris argues in his post that they always have the servicing rights built into the fair value. This means that yes, in fact, SoFi did sell their loans at a higher value than what they currently have marked on their book. Now, there's a whole bunch of back and forth on that post, which could take us days to cover in depth. I'll just add one small addendum Chris added in his chat with the CFO. He posted that the weighted average life of loans was 1.5 years, which is basically the same as their total loan book. And while he didn't really ask around the thought process around selling only $15 million in Q3, he's certain that the answer would be the same as they've given in the past, which is that they're getting a better return on equity by holding loans rather than selling them right now in this environment. Okay, so now that we've broken out that FUD, because there was a lot of FUD going on around the 10Q and just like people, crying wolf and saying that SoFi is somehow, Enron or whatever. Now that we broke that down, let's go on to the real reason why SoFi fell 17% this week.
What's up?
SoFi stock.
Let's buy some. The stock was down 6.5%. Made no sense whatsoever. They are turning the corner. They are doing everything right. I think it goes higher.
And that reason is definitely not, in fact, Jim Cramer, although one could definitely make a strong argument. It is insider selling. And there's a lot of FUD around this, so I'll try to break it down in a way that makes sense. So we had 3 really big insider sells for SoFi registered on November 6th. The first is Chad Borton, the president of SoFi Bank, who sold about half of his position, 152,000 shares worth about $759,000. The second is Aaron Webster, the chief risk officer, who sold 215,000 shares worth about $1.74 million. This was 1/3 of his total position. The third is Lauren Stafford Webb, the chief marketing officer, who sold 136,000 shares, about 1/3 of her position as well. Now, while everyone is panicking over this, I think it's important to put this into context. First of all of these people sold their shares back in June as well. Like, this is not an uncommon practice for those executives, because those executives are consistently granted more shares as part of their compensation. They're not expected to just diamond hand these shares all the way to $40 because this is part of their compensation. Right? Lauren Stafford Webb, sold like $700,000 roughly worth of stock. That could very well be a personal expense. I mean, she could be wanting to buy a house and doesn't want to pay an 8% mortgage on her house. She could be paying something else off. Who knows? Like, there's more than one reason that people sell their stock. And in fact, after all of these people sold their stock in June, they executed their options back in September. So they sold stock only to execute and get more stock, essentially. Very shortly, they're going to get shares vesting again. So a similar thing could also be happening where they're selling just to vest more. And my point is that it doesn't really matter because people sell for many different reasons, especially when they're granted stock as part of a compensation. One thing I'll tie into this is the Peter Lynch quote, insiders might sell their shares for any number of reasons, but they buy them for only one reason. They think that the price is going to go up. And guess who did end up buying shares this week? Chris Lapointe, Chief Financial Officer of SoFi, bought about 15,000 shares of SoFi, around $100,000. And SoFi CEO Anthony Noto bought 44,000 shares of SoFi, around $300,000. Now, obviously, this is a smaller amount than the shares sold, but I mean, these guys are buying shares in the open market, right? Like, obviously, that's very, very bullish. Anthony Noto has become notorious for buying shares in the open market on the cheap, timing the bottom, and oftentimes even seeing share prices double just weeks after he's bought in. The other thing I'll note is that he often goes on buying sprees. We've seen this in 2022 and 2023. He'll buy for entire weeks on end, sometimes for months on end, while the stock price stays depressed. This was pretty common practice when the stock was in the $4 and the $5 ranges. And so you're just seeing him buy when he thinks it's undervalued. And this is exactly what you want to see out of a leadership team, regardless of whether the insiders are selling their stock. And, if it helps, I also bought more SoFi stock this week. I'll continue to buy more under the $7 mark personally. I personally think the selling is pretty overdone and unnecessary, like for it to fall 17% in a single week on this news, especially as we head into Q4 profitability. In a few months, like I'm going to be buying that hand over fist, and I'm going to keep buying if it keeps falling. I didn't really, think that the entire news week was that crazy. Like, insiders have been selling. Insiders sold in June and the stock price fell. And then the stock price went back up again in July when they reported earnings. Like, it happens, man. Like, insiders will sell their stock. It's part of their compensation. There's FUD around SoFi selling loans. I honestly think it's really amazing that Chris Hager, a retail investor, can just get on the phone with SoFi's chief financial officer, Chris Lapointe, and break out some of these bear cases. Like, that is management actually caring about the retail community, and also why they're hosting this session on December 4th. And one last thing I will say is that, I do these SoFi weekly recaps every single week, usually on Friday, just because if I don't have enough time in my normal week to make consistent videos on individual news pieces, then I'll just bundle all the news and just do them all on the Friday. If you do enjoy these recaps, definitely subscribe to the channel, and you can follow along with more pieces of news around SoFi. I usually aim to make around 2 videos a week on SoFi. But for right now, this is the Fundamentals Investing Podcast. Thank you so much for listening.